Hello, everybody. Day 3 of our video series. Again, this is Mike Gandolfo with RE Solutions, and as you can see, I got the picture of the slide from day 1. We talked about how home sales in Louisville have been on the rise, and they're at an all-time high. And we're going to see that climb more and more again this year. And day 2, I answered the question: are we going to see sustainable growth for a while, or is this a bubble that's about to burst? And we talked about supply and demand and how the inventory is so low. And we talked about in terms of month of inventory. Now, I'm going to put this, instead of using months of inventory, I'm going to give you a little bit more perspective that people can understand. So last year we sold 18,000 homes in Louisville for the first time ever. And when we think about the real estate market as a whole, when the market was at its slowest here, we probably had 17,000 active listings going on at one time. When for us to have that neutral market of 6 months, we probably need to be somewhere in the neighborhood of 10,000 active listings going on at one time. This morning, we are sitting at 3,221 active listings. So that just kind of gives you a little bit more perspective of how much of a shortage of inventory we really do have. And I promised today, well, why is the inventory so low? What is causing the inventory to be so low? And we're going to look at 4 key factors today. The first factor we're going to look at is the fact that new construction has really been slow to return. And when we had the recession, we basically did not build at all. I mean, new construction came to almost a complete and total halt and standstill. Now, nationally, we need, on average, the 50-year average, we need 1.2 million new housing units just to keep up with population growth. In 2018, we're projecting somewhere just over 900,000. So we're still not even building at the amount we need to have population for the population growth. And this is coming off basically 6 years of not building at all. So from a historical perspective, we have all this pent up demand, and our supply is just, we have not been able to replenish supply quickly enough. And in reality, a lot of the supply we're building, because, you know, builders like to make money, is not necessarily the density that they need to get in a project, or the price point might not be at the same place where we need to have people who are purchasing. The boomerang buyer is the other major factor here. And what does that mean? Well, the boomerang buyer is the person who either had a foreclosure, a bankruptcy, or a short sale back when we were in recession. Well, now that person, because the time limit has passed, that person is able to buy again. So we're seeing those people who had to sell their properties back in 2009, 10, or 11, or 12, or whatever it was. Now they've gone through their waiting period and they're back on the market and they're looking to purchase again. The other thing is understanding the generations. And we're going to talk a little bit more about this tomorrow because the millennial generation effect is actually not happening as quickly as we thought it would. And again, I'll explain a little bit more about that tomorrow, but the millennial generation is huge. And as long as they're even moving out of mom and dad's basement and renting right now, they're still starting a ripple effect when it comes to housing units. We have the other side with the boomers, the baby boomers. And even though we don't have a lot of millennials buying first-time homebuyer homes right now, the baby boomers are looking at the same houses that millennials would be looking at for first-time homebuyers in terms of downsizing. So there's still enough demand to drive that, you know, normal 3-bedroom, 2-bath, under 2,000 square foot home that either a first-time homebuyer or a downsizer would look at. But the generational piece of it is why this is going to spread out. And again, we're going to talk more about the effect that the millennial generation is going to have on that, making this strong for a while. We're going to talk more about that tomorrow. The one I really want to focus on today is the interest rates. So imagine if you bought a home, and you bought a home in 2011, whatever, even 2015. 2015, as you can see on this graphic, the average interest rate was 3%. And we're looking at interest rates in 2017 closing out at 4%. I can tell you right now, 4.25% and 4 3/8 is not uncommon, and we're going to finish the year around 4.5%. This is a natural thing. This is a good thing, by the way. People have to understand that the interest rates going up is a good thing. And the 4.5% is going to be more of our new normal. We're going to continue to climb. We'll probably settle eventually in that 5 to 6 range. But 2018, we're looking at 4.5%. And if you had a loan at 3%, prices on that property that you bought at 3% have gone up. So now you want to move up, but prices have increased and your interest rates increasing to 1.5. It makes your buying power, at least what your new reality is, a little bit more difficult. So we have sellers that are a little bit more reluctant to sell because they bought at such a good interest rate. So these things are what are contributing to our low inventory, and it's probably why we're going to have low inventory for a while. The interest rate thing, though, will eventually adjust to what the new reality is with interest rates. And again, good interest rates are the sign of a stronger economy. So we need to make sure that we're okay with understanding why those interest rates have to go up. And really, we need to see them around 6. That's really where they need to be for us to feel really good about where our economy is. We need to have that interest rate number high enough where the private investor wants to invest in buying mortgage packages, is basically what I'm saying. So, and we're going to explore those other national economic factors at a later video this week. And I really appreciate y'all tuning in. Again, resolutions.realtor, if we can ever help you out. These videos are here to educate and empower the consumer. We want to be the person who provides wisdom to all the information that it's out there on the web. So feel free to ask us questions anytime. All right, take care and have a great day.